What are you expecting for tomorrow, and how long do you think this inflation picture will last?
Becky, that is going to be the key question. And part of why, markets are so jittery is the focus around what are extraordinary. We haven't seen these sort of inflation numbers in decades. And so, the markets are jittery around. Listen, it's going to be a strong number tomorrow. I wouldn't argue with the number you put up on the screen. Core CPI, we think is going to be about a 6% number. Listen, I think we're going to see a strong number here. You can never predict one number, but I think you're going to see a strong number here. I think you're going to see a strong number next month. Listen, then I think as you get into the spring and summer, you're going to start to see some things kick in. Some of the supply chain dynamics will improve. I thought Steve showed a interesting set of conditions earlier today about you've got supply chains that'll alleviate a bit. You'll get some of the base effects kicking in. Energy should come off the boil. So listen, I think it's coming down. The projections I think he showed earlier that we come up with the same thing quantitatively, that you get core CPI, core PCE, which the Fed focuses on, back down to around 3% by the end of the year. So it's gonna run hot today. By the way, the thing that is still going to be sticky high is wages, and that is the one. By the way, the one number tomorrow is rents. That's the other sticky thing that we're going to focus on quite a bit with that number prints.
Those are kind of key issues. Rent's very important.
Totally.
Everybody's got to deal with that. Wages is the key component to an inflationary spiral that you can't get out of. If wages we know are going to be sticky, why does everybody think that inflation is going to come down later this year? I still don't get that.
So I think there's a couple of things to it. We've had decent wages over the last couple of decades. What's really spurring the inflation today is this explosive demand for goods. Steve chronicled that earlier. You emerge from a pandemic actually twice. You get this explosive demand for goods, and you can't supply enough of those goods. So when you actually start to think, okay, where is that going to be a year hence or 2 or 9 months hence? A lot of that's going to come off. But wages, listen, I still think we're in a hot employment market. Friday's number was impressive. I didn't think you could actually hire that many people into the labor force during this Omicron period. So wages are going to be sticky. Becky, I do think, though, that you get a dynamic that people start to, some of this explosive consumption that's taken place is on the backside of savings and fiscal stimulus that have really grown. You're going to start to exhaust some of that over the coming months. So I think it's going to come down. Listen, I think it's going to be sticky high for a while, driven largely by the wage component, but it won't be at these levels we're seeing today. Listen, by the way, part of this, it's hard for the Fed to impact rent when you don't have enough inventory. So the question is, how much does a Fed have to go after this when it's really hard for the Fed to modulate some of this inflation?